The third curve is the curve all of us in this room are going to have. So this curve, we start, we begin and, slowly, we carry on, income increases, but we're not just earning an income. We're investing our money, and our money is working alongside us to the point where, even if we stop working, we have created income streams that are bringing in an income that replace our salary or cover our expenses. And so whether we work or not, we have income coming in that sorts us out. Ideally, this is where we want to be. And it only begins with you being able to manage your money and saying, whatever comes in, I have to put some money away. And that money that I'm putting away, I'm not just putting it in a current account. I'm investing that money in a way that then it can earn more money, and then I reinvest that money, it earns more money, and it continues in that way. Investing in real estate, in business, in shares, in stocks, in different things will get you there. So ideally, these are the multiple sources of income. You've got your earned income, dividend income, interest income, your profit income. So earned income is your salary. Your dividend income, you've invested in shares, or you've invested in somebody's company, or your own company, where you are receiving profit in the form of dividends. Interest income is investing in things like treasury bonds, treasury bills, money market funds, commercial paper, lending your money to others, getting that money back with interest. Profit income is buying and selling. So you could be trading. Maybe you sell, outfits for working out, you buy them cheaply, sell them more expensive, you make a profit. Rental income, we all know. Capital gains is where you buy an asset at a certain value. It goes up in value and you sell. That asset could be land, it could be stocks, it could be bonds, and you sell and you make a gain. And then there's royalties. So maybe you write a book. Some of you are musicians here, you write songs, and you receive royalties from those things. So there are really 5 main asset classes, and I don't want to bore you guys. I don't want to bore you. But there are 5 main asset classes. And the reason guys call it asset classes, it's just because financial advisors, financial experts find it easy to arrange it this way. Sorry, it's a bit distorted, but it's cash and cash-like assets. So cash and cash-like assets, your goal there is you want to be able to access this money easily. You want to be able to use it as and when you need it. So you don't want a situation where when you get your money, it's all in land. You get your money, it's in a house. You get your money, it is locked in such a way that you can't. And the one that you get that is extra, you put in a fixed deposit for 12 months. That's not quite what you want. You want to be able to have money that you can easily access. So you have things like savings accounts. You'll have things like call deposits for those of you who are in business. You will have money market funds, SACCO accounts that you can easily withdraw. That's cash and cash-like assets. Then you've got equities or stocks. That's where you buy or invest in a company, whether yours or not, whether listed or not, it is equities. Yeah? So you can invest in somebody else's business or your own. Fixed income investments is where you invest in something that you're lending money and they promise to pay you back that money after a period of time. I'm sure you've invested in treasury bills, treasury bonds, mostly treasury bonds, I think. Treasury bonds, anybody? Yeah, you've experienced it, treasury bonds. So you lend the government money and they pay you back every so often. So, you can get really good opportunities there, although interest rates are now coming down. I'm sure those of you who invest, hopefully you are enjoying 18.4% tax-free. Now you can't get that. But anyway, commercial paper is lending money to a business. So the business might need money, and they need money for short periods of time, let's say 6 months, 12 months. There's opportunities that we create as investment bankers for those guys to raise money. And so we put an instrument together called a commercial paper. We get investors together, and they invest in the commercial paper, and you get money back. And then, of course, there's real estate. And then anything that does not fit into those 4, we call alternative investments. So I want to now I want to wind up with my table. Let me see. Okay, so how does it fit into the concept I mentioned about Ashwin? So security basket, these are the types of assets that would be there. So your fixed deposit accounts, but don't just take a fixed deposit account, yeah? You need to negotiate, right? To get good rates, because the idea is, yes, you're putting money in a safe place, but try and get the best return possible. Money market funds, treasury bills, your home is not an investment, by the way, if you own your home. It is part of your safety net. Your pension, if you get an education policy, that would be in your security basket. Health insurance and other types of insurances. If you decide to invest in a course, a certification, it will be important for you because then it helps you either earn more income, whether you're an entrepreneur or you're employed, or connect, give you access to more customers. So that's part of your security basket. And then your life-enhancing basket. So here the idea is, I want to be able to continue to sustain my standard of living. So even as you do that, you want to have money available for opportunities, cash for opportunities, because opportunities don't wait for you to be ready, they just come. And so you want money available. So where do you keep that money that is available for investing? Is in a money market fund. Money in, for an emergency, you can also keep in a money market fund, but I usually say at least have 2 different money market funds. One for your emergency fund and another one for opportunities. And then of course you've got listed stocks and shares, treasury bonds, commercial paper. By the way, I'm not suggesting you invest in all these things. These are examples of assets that you would invest in and where they fit in. And then of course, you've got your business, you've got rentals. I've put Oak Special Fund there. It's a shameless plug. Because we have a fantastic new product, by the way. And just to borrow from Joram, our market got to that place where price became everything. In stockbroking, what happens is that we are selling the same product, right? Access to the stock market, it's like there's no difference between this broker and the other. Of course, service is different, but now when we went online, we all have apps and you can go online and do what you need to do. There's no differentiator. And so prices just started going down. Commissions, there was just a race to the bottom. And so we've all had to find ways to innovate. And one of the ways we've innovated is in our corporate finance advisory, where we advise companies, but another one is in our collective investment schemes. And so one of the products I'm so proud of is this one that is just going to just be amazing and is amazing, called the Oak Special Fund. I have a team here who will be able to break it down. But basically what we do is pull funds from different investors and invest the money in different opportunities. And one of the things that we realize is that people are just having a huge challenge making a decision. Do I put money in bonds? Okay, I'll put money in bonds, but then I'm seeing, NVIDIA is doing really well. How do I access NVIDIA? And you being able to do all these different investments, all by yourself and making the decision, do I sell now, do I buy now, can be a bit challenging. And so we created a fund that has traders that make decisions on where to invest. And so we have an investment committee that sits down, we have an investment policy statement and a document that guides them, but they make the day-to-day decisions of, do we buy NVIDIA or do we buy the treasury bond? Do we trade? Do we do a swap or a derivative with another bank and things like that? We got the license last year. We opened to the public in February this year. And anyone who's invested with us has actually gotten 24% return after fees in that particular fund. We are not promising the returns. We're targeting 20% per year, not that one Joram was talking about. But yeah, so it's doing really well for now, and we trust that things will continue to go well. And then we've got the aspirational basket. So this is the investments that will give you higher return. You will notice that as we're moving, what is happening? Thank you. Risk is increasing. Risk is increasing. The reality is, guys, you cannot be wealthy without taking risk. You just can't. That idea that you have, that business that you're thinking about, it's risky. But if you don't ever do it, nothing's ever going to change. And so you have to take a little bit of risk in order to make some good returns. And so I have a question for you that I want you to discuss on your tables, and then I'll wind up. Would you recommend buying a house, a rental, or buying a bond, a treasury?